up, guys? Welcome back to the channel. Big day ahead. Well, big week ahead next week, I think, with the FOMC. I think it's next week. I'll have to check that, but yeah, we've got some interesting moves with Bitcoin right now. I've mainly been looking at this this region here as previous resistance, right? And there's somewhat of like an order block coming through that zone, so it's like a retest of this low here. And we have so far seemingly found support off that, and we're trying to see if we can get a rally to come up. So not confirmed yet. Now another component to this is not just that support resistance line there. You've got a trend coming in from below. So you've got a low here, a higher low here, and another higher low here. So it's all part of this market structure coming up here. So we're sort of early days yet, but it looks like it might form some kind of ascending triangle if we are to rally up and test this resistance level again. What's up, Honest? What's up, Aaron? Let's Mars, Brian, Gigi. Sorry I couldn't make it to a stream yesterday, but I'm here today. That's all that matters. So I think the last time we sort of left things on the previous stream was somewhere through here, perhaps. I can't really remember. So yesterday was the 7th. I didn't do a stream yesterday, so pretty much all through here I didn't stream. I think, yeah, it was somewhere. Anyway, so like a little bit of development since the last stream is we've got this downtrend that we're working with right now. So that's on a shorter time frame. So if we go into the 1 hour chart, we are currently dealing with our structure break. So we've gone from making higher highs here. So if you're calling this the high or this the high, that would be the highest high so far. And then we've pulled in a lower high. And then we've broken the structure on the low side as well. So there's a lower low here. So we're working with like an ABC potentially, ABC correction of whatever this was here. So if we take the whole move like as a Fibonacci retracement from bottom to top, we're just going to see like what zone we've sort of bounced at as support. So it looks like the 50, basically the 50% Fibonacci level has provided an area of confluence with this support resistance line and this trend line coming up here. It's kind of like a sweet spot right there for a bounce. Can we maintain, direction up? We've just got the close of the daily candle now, so we're 1 minute in, and so far you have to wait for confirmation of that. So we need to pull in a higher high again, because so far the trend is, we've got this going on. So we need to get above this level here. This is like the market structure break that we're looking for. By the way, that's something that I really want to get into moving forward, is a lot more focus on market structure. So in B's Discord, there's a couple of like really good analysts in there or traders. You guys probably know him. So Trago, he's been sharing. So shout out to Trago. He's shared a lot of really good material on market structure and order blocks. And I'm still like getting my head around the more specific details of the strategy around that. But yeah, I think it is the right direction to go as far as analysis is concerned. You know, I think everything should start there as priority. You need to get an understanding of, you know, support, resistance, that kind of thing, and dealing with the trend. Like, you know, so to break it down simply, what do we mean by market structure? All it is, are you getting higher highs and higher lows? Then the market structure is bullish, right? That's a structure. Now, a break of this structure is if we pull in a lower low like this. Not to mention a lower high. That would be like, you know, your classic head and shoulders, right? The point is, you've changed the pattern. So, you know, a trend is pattern based, right? You've got a low, a higher low, another higher low, but then this one here is your first lower low. So that's a change in the combination here. You know, just as we've got a high, a higher high, and our highest high here. So it's still higher high. But then we've got, hey, hang on a minute, we've got a lower high. So the thing that breaks an uptrend is the lows. When you're measuring the lows, if you start to identify that there's a break off that pattern, you know, you could still pull in, you know, a higher high here, but the thing that changed the structure was the low. So this here is like the key. Now the thing to get this trend back on track would be to pull in another higher low to basically get things back on track. But more often than not is the case that once you've formed a lower low, you're less likely to pull in a higher high there. It's more likely to either double top like this or pull in a lower high. So now that's the same for the other direction, right? So there's the example of the market structure break of a bull trend, right? An uptrend. So breaking market structure to the downside is just, you know, all of those conditions inverted. So let me go back a couple. All right. So we got a low, or we're coming from a high down to a lower high, a lower low, a lower high, a lower low, a lower high, and then we'll call this our lowest low. Now, break in structure would be if we came up and got higher than our previous high there. And then not to mention, you know, following that up with a higher low, you know, that could even be down here. But that's the point. So this, just identifying the trend, the reversal of the trend, that's market structure breaking. So there's our most recent high from the downtrend, right? And then we're identifying that we have broken that structure. So this is the hint here. This high here breaks this combination. So, and you know, once you've broken that structure, you know, with this point here, once you've broken that previous high, you're likely to pull in a higher low to follow that. And it's not a hard set rule, it's just the likelihood. So you're you're likely to pull that in as a low. So what can happen though is, obviously you can pull in a lower low as well, but that would be like an expanding structure. Like, that's when you get like your megaphones where, everything starts getting, amplified, the lows and the highs. It's not common, but it can happen. But yeah, the more common thing would be perhaps a retest of that low, if not a higher low. Which is why we talk a lot about, head and shoulders or inverse head and shoulders like this, Now, another thing with head and shoulders is it doesn't just have to go and take off from that higher low. It doesn't mean that the trend's just going to take off and rocket. It can very well come back into what's known as the order block, like a retest of that block. And if it finds support there, that's like confirmation that this trend has changed direction. So I'll draw that out. Okay, so let's say this high comes in like to here, and you think that we're taking off, but it doesn't happen immediately because it wants to back test that order block. And it can even come as deep as like here, right? But you get that back test, and then it's more likely to take off. So I'll find examples of that on the chart for you guys, and I'll try and like bring this analysis into the here and now, like with Bitcoin, like trying to get it working that way. Duval, how are you, Duval? I missed hearing your voice, your impressions. So with an order block, I'm still brushing up on exactly where and how to draw them out. But I mean, it's something to the effect of this. I'm not going to use that. Now there is an indicator which I'll show you guys as well, because there's some strategy behind using a specific order block indicator that I've come across recently. So, all right, let's look at the structure. What have we got here? So we've had, let's start from down here. We've got a low, a high, a higher low, a higher high, a higher low, a higher high, and then, I guess if you really want to include that wick, maybe you call that the high. So I'll go back to that. But anyway, a higher low, a lower high, but we've still got these lows getting higher here. So this is not a break of structure just yet. You see that? So even though we're getting lower highs, we have not broken the structure of getting higher lows. So I guess to boil it down, lows are what define an uptrend, like what the lows are doing. The highs can do whatever they like. They can get higher or lower compared to, but the fundamental thing that keeps a trend as an uptrend is the lows. You want to be pulling in higher lows. As soon as you break that, like here, for example, this was an example of our first lower low, this wick down here. And look what happened to the highs. It killed the highs. Like we started getting real structure break. And this is where it tried to like get things back on track with a higher low again. But this is where you sort of try to figure out, how am I dividing these zigzags up? Like, am I counting these as part of the structure? And if you're not, then that's cool, because that just means you can do this. All right, now I can start manipulating things. So if you ignore all of that activity here, these highs and these lows here, you're mainly just including the extreme pivots, right? So going back to this point here, like, do I choose this or do I choose up here? I would say maybe choose up here, right? All right, so with the lows, super chat. Thank you, Matthew. You're a legend. Appreciate the support, man. Thank you. $5 super chat, very generous. All right, so what I'm going to do is circle our lows with green as support, right? This is our support structure. See how they're all higher than the previous low, yeah? High, high, high. The highs don't matter whether they're higher or lower than the previous. That doesn't matter. So see how these were getting lower, these highs were getting lower than the previous? That did not cause the trend to break. What caused this trend to break was this low here, pulling in lower than this previous one here. It's very close. It's a very close, like maybe there could be an argument to the fact that, you know, it's really this low that broke the structure. You know, if you want to get, you know, I guess that's where it could become, you know, a bit more unclear of like which one actually broke the structure. But technically, if you're including the wicks, this is the one that broke it. So I'm going to change those to like, I'm going to change that to orange, like as a, I don't know, I'll have to come up with a system of the coloring, but anyway. The highs, so, you know, pivots on resistance, make them, let's say, what have I got here? I'll make them yellow. So, and I'm going to go totally against what I just drew up and change all these greens to blues. That might be better. So we'll go blue for support, yellow for resistance. Blue for lows, yellow for highs. Like that. Okay. And I'll make these lines of support and resistance a bit bolder so that you can see them. Maybe I'll delete this fib retracement because that's getting a bit, it's muddying up the chart a bit. Okay. Yeah, so moving forward, that's the system I'm going to have. Anything that's resistance is going to be yellow, and anything that's support is going to be blue. So the context of what classes something as support going blue is where price currently is. If price was to fall below this blue line, and then back test and then find resistance on it, I would change the line to a yellow line because it's now acting as you know, a recent example of resistance. So it would go like that. But we'll keep it blue because price is currently above it and it's using it as support. So now let me so I'll rein all this back into what the point I'm getting to in a minute. Just give me a moment. All right, there we go. Obviously, like, I won't be doing this moving forward, like circling every single. This is just me like drawing out an example of the structure, the market structure. So our low broke just here, and when something changes, perhaps I'll put it as like, what's a totally different color, like pink, make it magenta. So pay attention, something changed here. We've got a lower low, you know, and then here, actually that probably just should stay yellow. Yeah. All right, so now we're really paying attention to our highs because that would break, you know, it's now that we're in a downtrend, the thing that's going to change that structure is our highs. So we're not looking at the lows anymore. We're looking at the highs. That's what we're paying attention to. So hypothetically, let's just draw, you know, a path forward to show you so that we can identify like what would change the structure. So we haven't really completed this move yet. You know, we could still come down here, or we could continue to recover. So from here, if we were to come up here and double top here, like where we meet the same level of resistance, that wouldn't break the structure of a downtrend yet. What has to happen is, let me just do that so I can, okay, so I can manipulate this point. So to break this downtrend, this high needs to go up higher than this one. And I'll draw a dotted line here to identify that. So that's our line in the sand right now, because for market structure. We'll make it white. Okay. So yeah, until proven otherwise, we are still in a downtrend, you know, on this time frame, this 1 hour chart, right? So when I zoom out to the more macro view, like let's say the daily or even the weekly, we can identify what part of the trend we're in. There's no doubt we're in a downtrend, right? But yeah, we'll identify the features of why that's the case as well. So yeah, we're, you know, if you're looking for a long, like if you're looking for a break in structure, we need this next high to come up and beat this previous high here, yeah? If not, if we get a continuation down and we make a new low, like, I mean, like I said, the lows don't matter too much. It's all about the highs in a downtrend. So this would classify as a continuation of this downtrend. And, you know, lo and behold, what is this? This is a pennant formation, right? Look at this. This is like, this would have the hallmarks of a pennant, like a bear pennant. See how it doesn't matter about the highs in a downtrend? It matters about the lows. It matters about the highs. So hopefully this is making sense. I guess the more I talk about it and the more I make it a thing with my analysis on this channel, the clearer it'll become. And, you know, I'm still like sort of developing this form of analysis, I suppose, which, you know, it's not something I invented. It's something that I'm learning from from another analyst, I guess you could say. And it's like, obviously market structure has been around for a long time, but this, all right, I'll show you the, so this is a full shout out to Trago for sharing this. There's a guy on YouTube called Mete Kaplan, or M-E-T-E Kaplan. I'll put that in the chat. So he's got a whole channel that teaches this market structure, you know, supply and demand zones, order blocks, and how to analyze this to basically, you know, make your entries and make your exits in the trades, whether they're long or short, right? So I'll probably show you the folder. So there's a whole bunch of PDFs with all of this in it. So once again, yeah, shout out to Trago for sharing all that, for getting us onto, get my screen back 1 second. Here we go. Yeah, for sharing that resource. It's very valuable. And I don't doubt that there's probably a lot of other videos on YouTube as well of people teaching, you know, market structure and order blocks. But yeah, this looks like a good starting point. It's very clear and clean. I'll upload these onto my Discord channel as well if you guys want to find them and you know, read through them. But here we go. We're getting a bit of a move going here. So there is a lot of work to do. We have to get up above $17,143. 17,143 is my line in the sand. That's, you know, that's going to be a form of resistance that we have to beat and get up on top of, right? So where was I going with this? Yeah, so in this downtrend, you can form consolidations, which can be things like pennants, like what's in this example here. And a continuation is highly likely when you do that kind of pattern, right? So no change to structure. There's no structure break with a pennant, like with a continuation pattern. It's just a continuation of the trend, right? Of the structure. So a break in structure is a head and shoulders, or, you know, a double top or a double bottom, right? So what would depict a potential head and shoulders would be if the current price moves up here, you know, however soon it gets there, who knows? Like, so it would be a double top here, and then a retest, something like this, like another low, but it would go higher potentially, and then test this neckline, wherever that neckline may be, right? So in this case, it would be, you know, in this very clean example, it would be here. This dotted line would be the neckline. So with that neckline, you know, it does not mean that price has to just rocket up from here to be a valid inverse head and shoulders. To validate it, you know, price can still come down, but it can't get lower than this shoulder here. Otherwise, that would invalidate the inverse head and shoulders. So it needs to find support higher. If not, you know, obviously the trend can take off without backtesting. But yeah, hopefully that's making sense there for you guys. Hopefully it's clear. So yeah, let me know, guys, in the comments if this is helping or if it's making sense, or even let me know if you knew this already and that you've been analyzing charts like this the whole time anyway. Yeah. Oh, awesome. Glad to hear it, Jack. So, you know, a break in a low. All right, let me finish drawing out these highs and lows here. So it'd be cool if there was an indicator that did this, like circled the lows as being in sequence, like higher lows, higher lows, higher lows, and then a break in structure would be circled with a purple low or, you know, magenta colored low to really like alarm you and let you know that the combination has changed. And then it goes, you know, back to the same color again, blue, as we're getting lower, 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 lower. And then, yeah, when this changes to a potential higher high, which matters in a downtrend, right? When you start getting higher highs, it means you've broken the structure. So this would be a purple circle if we did break that market structure. And then, you know, the likely low after that high would be higher, a higher low, more often than not, right? And that's how you trade. So making a trade. Now, this is the next part of it. This is the next stage. Okay, we've analyzed the structure. Where do you take your trades? Like, and I would say that is based on break of structure, break of market structure, right? So let's say you enter a long on a break of the structure. You'd put that here. Wait, this is a short. Get it long. Okay, so let's say we're putting our trade here on the break of the market structure. Now, where would you put your stop loss? You'd want to put your stop loss below the recent swing low. So it would go like roughly here, right? You don't want to put it exactly on it. You want to get it a little bit below, just so, you know, you sort of beat the so-called stop hunt, right? And then you want to target. I mean, you could go for a shallow target if you want, but you really want to get your ratio to be at least above a 1-to-1, right? Otherwise, you're sort of wasting your time. A 1.5 is a good target to have, right? And look at that. Where does that take us? 18K. So that, you know, if this happens, this is a hypothetical, right? If this happens where price does come up and beat this previous high, it's okay to open a long on that condition, right? With a stop loss set below the swing low. So that's what I'm going to be looking at here. And I'm going to keep all of this analysis up and we can follow it. Even if it takes a couple of days for this whole thing to play out, because we are on the hourly chart, right? This will be interesting to see if, like, what we get out of this move here. Are we going to get a break in the structure to the upside? Because yes, there's no doubt we are in a downtrend. All right. So, well, let's get an arrow to depict this. So just to really break it down simply, we've come from a low all the way up to our highest high. So our lowest low to our highest high is the uptrend, yeah? Our highest high to our current lowest low has been the downtrend, if that makes sense. When we break the previous high, that's going to change this to a new trend. We're going to be like saying that, okay, a new trend has begun because we've made a new high, and this will be green, right? So until then, we're in a downtrend, you know? And with that information in mind, and you know, if we're in a downtrend, you can play it the other direction too, right? You can open a short at the test of this high, or you know, let's see, like if you see evidence that this high has formed resistance, or I'm just trying to think of how to put this. Okay, let's see. You could even, like, this is late. This is coming in late on the trend. I don't advise doing this, but this is just an example. Okay. This, if you entered a short right now, you would want to have your stop loss just above the previous swing high. Yeah? Because if we break that swing high, it means we're uptrending. So you don't want to be in a short if we're in an uptrend, yeah? So at least if you're opening a short right now, you're trading in the direction of the trend, because we've got lower highs and lower lows. That's the market structure we're in. So boom. Boom. We are in a downtrend right now until proven otherwise. Now, proven otherwise means, remember, break of structure. So we have not broken structure just yet. Now, the cool thing is this works on lower time frames for scalping, yeah? So let's take a whole new different chart, because I want to leave all this here. And we'll see. Let's leave this as a short. Let's take a short right here, hypothetically. Let's take a short right here. Hypothetically, do not follow this. This is an example. And set the stop loss above the previous swing high here. I shouldn't say don't follow it. I should say follow at your own risk. You are responsible for the trades you take. It's not my responsibility for what you choose to do. Okay, got that out of the way. Now, always target. I'm gonna say target 1.5. You know, keep it conservative. Don't go for like a 6 or something. And what I'm talking about is this ratio, this risk to reward ratio. If it's only down at like 1-to-1, you're kind of wasting your time. Like if your risk and your reward is 1-to-1, you want to get it positive. You want to get it, 1.5 is okay, I think. Okay. I can't nail it perfectly on the 1.5, but that'll do. All right, I'm going to lock that there. That's our short trade. It may get stopped out, so be it. If not, then you're following at your own risk. Okay. So, yeah. The name of the game right here is that we are in a downtrend, yeah? That's the structure on this hourly chart. There's no denying that. So let's look at a fresh, clean Bitcoin chart, and we'll go macro. I'm gonna go like weekly, okay? Let me just see which ones these belong to. So that's okay. Let's go to the Coinbase Bitcoin US chart. Yeah. Let's go to Okay, what did I say? Weekly? Okay, let's check out the weekly structure. What have we got going on here? Obviously, we're in a downtrend right now. And I don't know if you call it cheating or not, but if you use logarithmic to frame everything up, in the super cycle, there's no, obviously we are in an uptrend. There's no break of structure just yet. To break structure of the overall Bitcoin bull market that we're in and have not left, you would have to get a low pulling in lower than this, right? Low, higher low, arguably. Currently at a higher low if you identifying what's happening now. Highs, the highs don't matter in an uptrend. It's all about the lows, right? For this to maintain structure. So yeah, we have not broken market structure on the macro, the super macro. End of story. We're in a bull market. Now, what I guess boiling it down to the more recent events and price action and price history, we'll take it off log, we'll go in and we'll see, yeah, we're in a downtrend, we're in a bear market. So maybe we go down to the daily for that. Okay, here we are. We all know our highest high is the all-time high, the current all-time high, yeah? And I'll do this as quickly as I can because I know this is probably like just repeating myself, but the main structure I see here is something like this. Like all the highs that really stand out. I mean, I guess you could call these ones highs too. And maybe that one. Okay, that's enough. That's plenty. These are the major pivots to me that stand out. Here's a low. So we'll make it blue. Another low. Another low. Another low. Another low. How's that? We have not broken this downtrend yet. To get market structure break on the high term time frame, what do we need to do? Remember, it's not about the lows in a downtrend, it's about the highs. You're focusing on, when a high gets broken, not when a low gets broken. So I'm gonna have to put in another low here, just so I can get this working properly. Okay. And then these are just that's all undecided. These don't, just ignore these pivots. They haven't happened yet. They're just, yeah, future pivots to play around with. I guess we need another circle. We're kind of really dialing into the more micro structure here. But you know what? I'm going to delete these because it's really this high here that matters. So I'm going to shift this across. And we only need to look at this. There. It's more like that, isn't it? This is the structure that matters. So we're currently... Let me get all these points and move them off screen, because they're just, we don't need them right now. We are focusing, where are we going to put this pivot, yeah? Where is this pivot going to be? Is it going to be up here? Or is it going to be down here? Like, is it going to continue down? That's the key. That's the line in the sand. You could argue, I can see an argument for this being the previous high that we have to get up above. And yeah, that's fair. If you really zoom in, sure. But I think the more important high would be to get above is 25K, this 25K region. And if you want an exact value there, just get the price. I'll make this perfectly horizontal by holding shift. It locks it to 45-degree increments. So we want it perfectly horizontal, and that gives us a price of $25,214.57. There you go. So until then, we are in a downtrend. So looking for shorts is the way to go right now, until proven otherwise, yeah? We don't know where this high belongs yet. It's still getting built. It very well could only come up as high as this point that we've recently pulled in. But yeah, until then, this is where we're at. So the annoying thing with the whole FTX bullshit was that we did get a low here, right? We were dealing with this. This is what was really frustrating for me and everyone else, I'm sure, was we were on the trajectory. See, look, we were heading up, and things were starting to look like we were maybe like getting back on track, and we might have had a shot at retesting 25k, and if we got higher, that would have been our break in structure right there. This would have gone pink, like, pay attention, we've just broken structure here, we've got a higher high. But FTX happened, it's a reality, you have to deal with that. So our high came in lower and our lows lower as well, like this. Whoops. So here we are. So yeah, I guess, zooming in now that we're zoomed in to this structure, to this market, where's this point gonna go? Are we gonna start fighting and then getting back above, say the previous high? This would be like the break in structure would be this 21,500, we'll call it. If we get above 21,500, that on the higher time frame, we have started an uptrend for Bitcoin. But it's still pending right now, isn't it? We don't know where we're headed right now. We just got to play it by ear. All right, so that's the higher term time frame. We're in a downtrend, just like we're in a downtrend right now on the very micro scale. See, we're on the 1 hour chart. That is considered a micro chart, if you ask me. I think the macro would be, say, like the daily, the weekly, the monthly is the more macro view. 4 hours a nice, like, happy medium between the two. Now, another thing I'll show you guys is, check this out. If I delete these zigzags and all these circles, well, I'll just go into the tree because it's going to be way quicker to do it like this. Okay. Get rid of those trend lines. Okay. Now, if we go indicator or indicators, there's a tool called Zigzag, and it's good if you're feeling lazy, I suppose. If you don't want to like have to go through and draw out, let's turn all the labels off as well. We don't want labels. We just want the lines, and we want to make that, like, let's say a white, like a bright color so we can see it. Okay. There's our zigzags. That's our market structure. You can actually dial in how sensitive you want it to identify market structure as well. So you can have the depth. If you make it 1, it's going to follow the price tight, really tight. But you don't want that. It's going to be too noisy. You want to try and dial out the noise. So you could even get it better than that, right? That's nice and clean structure. There we go. Maybe a 30. How's that go? Yeah, 30's cool. All right. There's the structure that we're dealing with. So a 30 on the zigzag indicator for the depth. Deviation, I don't know what this does. Let's play around with it. So the default's 5, so I'll go back to it if necessary. I see. So it just deviates. It ignores It ignores the noise, basically. You're just dialing out the noise with the deviation. But I think a 5's nice. A 5, it's because when you're zoomed in, it picks out the important pivots, you know, like because you don't want to drown out too much, because then you're not going to get any information on the short-term trading. You want to, you know. Okay. So what matters in a downtrend? It's the highs. Have we broken higher high? See, this is why it was exciting, because look at this. We had a whole series, we've come from a whole series of lower highs since like April or May, or sorry, March, technically. That's the high we started from, yeah? Ignoring everything before. You know, if you're talking about recent history, like this year, we've been dealing with lower high, lower high, lower high. You know, that was lower as well. It's been excluded on the zigzag. Lower high, higher high. You know, bingo. This is what was getting everyone optimistic for once. And then, you know, straight after we pulled in that higher high there, FTX happened. FTX collapsed, Black Swan event. And so now it's a continuation of the downtrend. So we're high hunting. We're looking for those highs. This is the one to beat. We want to get above 21,500. That's our line in the sand. The lows don't matter. Lows in a downtrend don't matter. It's all about the highs. I'll keep repeating that. Lows, lows. See, look, the lows came up higher. We're still bearish, even though the lows were starting to get higher. I mean, it's optimistic, don't get me wrong, like to see higher lows, but it's by no means is it a change or a break in structure, you know? So, yeah. Low, low, low. Yeah, the zigzag is beautiful. It's a great tool. Get comfortable using it. I'm sure, like, you know, if you use it enough, there'll be a point where you don't need the zigzag on. You can just see it naturally in the chart. Yeah, you see the zigzags with the naked eye. But it's helpful if you need a bit of assistance and it, you know, highlighting where the lows and the highs are. And I'm sure that there's zigzags. I'm going to do this live right now. Let's see if there's an indicator that shows market structure other than the one that I have on before. Market structure. Where's a really highly voted market structure indicator? Or failing that, zigzag. Ones that sort of highlight that the lows are getting, you know, a break in the structure. Zigzag channels. Let's see what this is all about. Okay. So not that one. Something that just highlights or labels the pivots. I mean, I suppose the zigzag indicator did have labels. I just want to see what they're all about. Reversal price. Yeah. Yeah, maybe not. I want something a bit more basic than that. I don't want all that information. I mean, this indicator, yes, I'll show you it anyway. So this is, see how it says MSB? That's a market structure break. It's looking at, and these big rectangles here are order blocks. So these are bearish order blocks. Now an order block, I think with this indicator, it just sort of, it finds where high volume went short, and that treats it as an order block. So high volume going short, high volume going short. Nowhere have we seen at all in recent price history, you know, any volume going long from that, at least from this scale, right? So this year has been obviously bearish. I think you'd have to start dialing in on the lower time frames to start seeing like comparatively where the blocks live, like these order blocks. Okay, so down on the 4 hour, we've got an order block below us here at around above 16,000. It's in the low 16s. So between say 16,100 and 16,300 is a bullish order block. So we can dip into that block, right? Which is likely. I mean, we could definitely do that in the coming days. We could dip back into that block, fill some orders, and then come up, and that would be an awesome entry for a long right there. If we dipped into the block and then proved that we came back out of it, going long there would be a good idea, I think, and then setting a stop below the previous swing low and then heading up. So yeah, let me link to you a really good video that goes along with this indicator. Let me find it. I'll link it to you guys in the chat there. Here we go, crazy accurate indicator.
In this video,
okay, let me paste that into the chat. I'll pin it to the top. That goes with this indicator. Now, if you want to find that indicator, it is called Market Structure Break and Order Block by EMREKB, E-M-R-E-K-B. It's got 7,366. So that is the indicator. It's a free indicator. You don't need to pay for anything with that. And yeah, that video uses that indicator. It's a great video to show you the conditions for entries and exits and what to look for. So check it out. As far as like changing the settings, all I've done is dial this back from 33. This is the default. And I've just dialed it back to 273. Like that, 273. Based off what his settings were in that video. So yeah, that's the MSVOB, Market Structure Break Order Block indicator. So if I zoom in, you can sort of identify like what caused this line to come up, MSB. Bearish market structure break. I can see why. Price pulled in a lower low from the previous low. See there? Because up until then, ever since this bullish market structure break, which is, you know, from the lowest lows down here, ever since then, to like the high here, we've been getting higher lows, low, higher low, higher low, higher low, and this was our first lower low, and that's why this has come up with a red line. That's a market structure break to the downside. So I guess one strategy would be you could open a short. You could open a short when you see these things paint in, right? Market structure break. Open a short, and then do it with a stop loss that goes beyond or higher than the previous swing high. So let's say See, this was a strange market structure break because we got a higher high after it. Not that that matters. It doesn't change the fact that the structure broke, but we got a high here with a higher high. So this was a little bit of a liquidity grab, because more commonly when you get a market structure break, price does this. So there's our previous high here. What is more often the case when you get a break in structure is that you get a lower high from the previous high. So if you want to get real technical, the high is down here, the previous high. So this broke structure, but then there was this push, and this is a manipulation. This is market manipulation, pushing price beyond where it should have found resistance. So it's a bit of this. This could be seen as a bull trap. It could be seen as a liquidity grab. So people that have liquidations or stop losses beyond that point. So you have to be careful of that, and that's where this is where stop losses come handy, I suppose. You know, if you have your stop set here because you took a position off this market structure break here, then you know you would have been taken out in that. So yeah, if you see a market structure break and then a rally that starts to happen off the back of that, let that rally play out, like let it do its thing, and try to identify where the next low is going to be. At least with this indicator, the zigzag is not depicting this as a low here. That's not a low, according to this zigzag. So you ignore that, and then you can say, okay, well, price is coming back down again. It's below the previous high, like major high. So I'm going to open up a short here on this. See this red candle, how it entered back outside of the previous high, below it, this dotted line. If we opened a short there with a stop loss beyond the previous swing high, so here, that would be a trade you could take. So that would be something like, it looks something like this. So the candle closes there, open a short, stop loss just above the previous swing high, so there, and then target 1.5 the profit, 1.5 the risk. So you would exit there. Your exit would have been here. Now obviously you basically put in a conservative target because you don't know where price is going to go. You would have opened it here, the short, and you would have been like, okay, I'm going to target 1.5. The fact that we went right down here, don't let that get you down. You know, you missed more of a move out of that. I guess one way to take advantage of price going beyond your target is to follow your trade with a trailing take profit. So what does that mean? So when your trade goes into profit, like as soon as it starts moving toward, you know, into the profit direction, you can move your stop loss from the swing high and then put it to break even. And then, you know, that way, you know, you don't lose anything. And if price was to go above where you entered, you don't want to be in that trade anyway, right? Because it's gonna lose your money. But anyway, at any rate, this comes down, and let's say we get to this point where we've found the low. Okay, we've bounced here. There was a bounce on that wick there, yeah? So you wait for that candle to close and you realize, okay, the next candle's down here. So that's where you would start moving your stop loss. You know, you can't do it with this tool, but basically you're just extending your stop as price falls, and then the moment that price comes back and takes that stop out, and that's when you take profit. So that's one way to capture a little bit more profit. Sorry, that was a really bad explanation. Very confusing. I'll try to clean up the explanation of it for a later video. But anyway, trailing take profits, that could be a whole other video. I guess the important thing today that I wanted to get across was where you know, the strategy behind opening a long or a short, and then setting your stop loss either above the previous swing high or below the previous swing low if you're going long. Okay. So where are we right now? Is there any order blocks happening? That was the FTX drop, by the way. Okay. DC Woodworking says, yeah, 3 commas has been a great tool for trading. Yeah, 100%. I love 3 commas. There's a thing called Smart Trade within 3 commas, and it sort of automates things so that you can just dial in your parameters, and then the Smart Trade feature will do the rest. Like, it'll execute according to your parameters that you set, predefine. Yeah, it's really cool, really nice. So what are we dealing with right now? This is okay. This is the high time frame. There's the FTX collapse on the left there. We've identified, well, this indicator's identified some kind of a bullish order block just here, and we seem to be like somewhat rallying back down toward it at the moment. If let's see, it hasn't painted the zigzag yet. It's still playing out, but there is a market structure break here. You can see it because we have a low, we have a higher low, another higher low, and then now we've gone beyond that. So this is our first lower low, and that has broken this uptrend. So I know that the indicator already is going to trace this out like this and say bearish, like, so MSB red. We know that. This is now remember, we're on the 4-hour chart here, so that's what the indicator is going to do. I can almost guarantee it. It just hasn't painted it yet. God knows why. And this is zigzag. You know, it could be the sensitivity of the settings, so I'm going to see if I can change that. Zigzag length. Let me delete my manual line that I put in there. And we're going to see if we can get a market structure break line just by changing the settings here. Oh, wow. It's like putting up all different order blocks depending on how sensitive you put the zigzag. So I think it was 9 by default. Now maybe it's this fib factor for breakout confirmation. If we make this a little bit more sensitive, maybe. It's getting really low. All right, let me go the other way. See what that does. I'm sure that's probably going to take away some of these signals. Yeah, I mean, that's what it's all about with these tools. You just got to experiment with the settings and just see what a setting does. If you dial up too far, maybe some of these signals get taken out. Yeah, see that? So up here, 65 is the golden pocket, 0.65 fib. 786 is the next, so that'd be like that. Anyway, I'll hit cancel. Out of the box, it should be set up fairly accurately for how it's supposed to be used. Anyway, that's Bitcoin. Where are we at? Let's go back to this chart. How's our short looking? It's in profit, our short so far. We took it, we opened it here, and price has come down so far 0.27%. If you were on 100x leverage, that would be 27%, I think. Yeah, 0.27, 100x, 27% in profit so far. But I'm not, not by any means advising anyone to go 100x. Get that. Yeah, don't go 100x. Trade spot. I mean, that's, yeah, if you want to really dial down the risk, just do this on spot, right? Or even paper trade it. Paper trade it. Do what I'm doing. I'm paper trading this right now, this strategy. And we're just going to go through and see how it performs. Oh yeah, that was the other thing I was going to do, is go down to like a super small time frame. Like let's see if this is doable on the 1 minute. This is the 1 minute chart. You get your answers pretty quick on the 1 minute. So what are we in here? We've got market structure break to the upside because we got a higher high, because this point here was depicting a break in structure as we came down here. But now, because price got back up above this high, this green market structure break got put in, so you could set like a long there, take profit. Anyway, remember the stop loss matters. So instead of using this indicator, I reckon just go back to zigzag, I think, and just identify it for yourself. So go turn off all the labels, make it brighter. Labels, just lines. Okay, now where the hell's the zigzag? I don't know if it's got a problem with this chart deviation. There we go. Okay. Because we're on the 1 minute, you have to really dial down the sensitivity here. Let's go 0.05. Is that going to do anything for us? .01 perhaps? There we go, that's neater, that's nice. Okay, 0.1. So this is if you're scalping on the 1 minute. Depth. Just want to see if I dial the depth, what that does. Okay. Keep it at 10. 8. Yeah, 8's good. Okay. So 0.1 and 8 on the 1 minute chart for the zigzag pattern, zigzag indicator. We've got our low, our high, higher low, lower high. So price got below the previous or the lowest low here. So it broke structure, indicating a downtrend. So yeah, it's currently in a downtrend on the 1 minute. Now what's going to break that downtrend? It's the high that matters, remember? It's not the lows, it's the highs that matter. So we need to get above this high here to break this structure. So I'm going to draw a line across, make it dashed like that. I've got an alarm going. I have to go to an appointment soon, so I'm going to wrap the stream up pretty shortly. Let's see if we can break that structure. If not, it's just a continuation of a 1 minute downtrend, right? It's very choppy. It's probably a pretty bad example to show, but it's, yeah, price has been choppy on Bitcoin. Doesn't mean you can't trade it. So what was it that broke us coming up here? It was the low, it was the high, wasn't it? Yeah, this high came in lower than this high. Sorry, it's the lows that matter in an uptrend. So that the lows got broken here. Okay, yeah, here is where we broke structure. There, right there, because we had a low, and if you're using the zigzag, there's the low, there's the higher low. So low, higher low, high, higher high, lower high. Remember, highs don't matter in an uptrend because we were in an uptrend at that point. We were in an uptrend. So the thing that broke this as an uptrend was us breaking the recent low, which was this. This was the most recent low, and we broke it right here as price crossed lower. So when you break structure like that, maybe that's where you can enter a short and then take profit. You know, that's another thing, choosing where to take profit. Stop loss beyond, just beyond the previous high, targeting 1.5 as the ratio, the take profit ratio, yeah. So this would have been a profitable trade on the 1 minute. Now let's dial in, let's see how long that trade took. So if you opened, let's say you opened after the candle closed, yeah? So price was here, candle closed, confirmation that we broke the structure because the candle closed. So this actually might, this trade's still active then, still pending. So let's see. Price did come back up a little, but it failed to get beyond, to get back up on top of that line. So maybe you could have opened a short on the confirmation of that, with the, you know, the stop set up here. And if you're going for a 1.5 ratio, see the 1.5 here, risk reward, this would have been a profitable trade. We'll see how long that took to get to the profit. I guess it hit right here. So if we really zoom in, this trade only lasted 10 minutes, that short, and you would have captured 0.21%. So at 10x, that's, what's that, 2.1% at 10x? Pretty good if you're using a decent amount of money. For 10 minutes work, that's pretty good. For a 10-minute scalp, quick scalp there. So what's gonna break structure as we come up? What are we looking for? We're looking for a high. We're looking for, delete these so we're not confused. So we have our low, lower low here from the previous low, lower low. We have our high. To break this downtrend, we need to get above this dotted line. So until that happens, it's a downtrend. where could you fire off a long? You could fire off a long position when you get confirmation that this higher gets higher, right? So something like here, with a stop loss below the swing low, which is down here. Now I'd have to zoom out a bit to see the to get the target accurate here. Risk to reward of 1.5. If you want to go more conservative, you can make it 1.2 if you want. But yeah, we'll go 1.5. Obviously, trend matters. You want to be taking trades to trend. Overall trend, remember we're in a downtrend. So this is risky, taking a long. It's less likely to get profit. So I wouldn't advise trading against the trend. Just you're basically taking on more risk than is necessary when you're trading against the trend. That's not to say it can't be done, but it's just, yeah, it's more risky. Anyway, hopefully this stream has been, what's the word? Worthwhile, I suppose. Hopefully you've taken value from this stream with this, me focusing so much on market structure and where to enter and close positions, that kind of thing. I haven't put this to practice yet. I haven't put money behind doing this yet, so I'm excited to do it though, because I know that if you repeat, this has been proven, this strategy has been proven, that if you do it over a long time, that it's profitable. Like, it's because of the way the risk to reward ratio works out. You've got a 1.5 risk to reward. It means you're gonna make more money on a win than you're gonna lose money on a loss. And with the probability of taking positions based off these conditions, right, your win rate matters too, like how many times you're right about taking that position. So it doesn't mean you have to get every single trade right, but Type Jack, $2 super chat. Thanks, man. Appreciate that. Always love these streams. Me too. I love doing the streams. It's good fun. But you guys you're basically learning at the same pace as me right now. Like, I'm figuring out this market structure thing and where to open and close positions. So I'm sort of just trying to pass that on. And if it works as a strategy, then hell yeah. We're all winning. And it's gonna be a money maker. All right. Well, I'm gonna hop off the camera there, and it feels good to turn that light off that's like shining in my face the whole time. But I'm still here. I'm gonna wrap up the stream shortly though. And yeah, remember this is our chart that we're doing analysis on. I'm gonna keep this TA here. Now that I've sort of described the ins and outs of the lows and the highs, I'm going to delete these circles just because let's clean up the chart a bit. And I think this was what I drew in, so I'll delete that too. And we'll turn the zigzag tool on and let's get that working. And it's still okay to draw up structure if you find structure. Like, patterns, not structure. If you find patterns, by all means, draw them up and follow it. You can just use those as confluence, right? But the primary driver of analysis should be, support, resistance, and market structure. So support and resistance is a component of market structure. So we are currently in a short That is, it's in profit. It hasn't hit our targets down here. Let's dial down to like the 1 hour here. I'm going to turn on, delete that. Actually, I can just bring it in like this. I'm going to turn on the zigzag. Because I find it helpful too. Get rid of all the labels. We'll make it white so we can see it. And I have to play around with the depth and deviation maybe, because it's not displaying yet. There he is. So deviation 2. Depth. I think 9's the default for depth. Sensitivity, we want to capture a bit more of the price action. Yeah, that's cool. I like that. So deviation 1%. Depth. Dial the depth back. See if we get any clearer. Okay, no. 10 works. 10's fine. So 1 and 10. White, no labels, zigzag. Alright, that's cool. Now what, so uptrends are the lows, you're identifying lows. So in this uptrend, our, like I guess the most recent low was this one here. And we didn't break it on that swing down there, but we did here. This is where we broke it over here. So that's what turned this into a downtrend. And now that we have our downtrend confirmed at this moment in time, right over here, we're looking for a break in structure to the upside. So, I mean, we're not looking for it, but we're keeping our eye out for it. If we get above this high, we know that the structure is broken, so that would become an uptrend. Now, yeah, we're currently in some form of, it could be seen as a bear flag or rising wedge. I don't know. I'm going to draw lines around it though, either way. So leave it there. Let's lock that in. Now this underside here, it's still playing out. Yeah, it's pretty ugly on the bottom side so far. It's hard to sort of like identify the structure there, but okay, instead of that, maybe it's like up here. This can be pulled back a bit. It's like a smaller triangle, isn't it? Maybe for the active pattern, I can make it bolder than the previous patterns. Like that. So this is our currently active pattern. it is somewhat of a bear pennant, I guess, because we're coming in a downtrend. We are in a downtrend, bouncing inside of a pennant, and we're looking for the failure. All right, guys. I'm gonna, like I said, I'm gonna leave all this TA up, and by next stream we'll know how this hypothetical short position played out. Target is down here for the short. Stop loss is up here. You know what? I'm going to use raise because raise go to infinity to the right. Let's do that. So, okay, take profit is there. And stop loss is here. So one of these is going to get hit. Either we're going to get stopped out or we're going to be taking profit on this hypothetical trade. So be prepared for that. And that's at a ratio, that's at a 1.5 risk to reward ratio, this trade. All right, we'll save that and we'll wrap it up. So thanks a whole bunch. I see there's 29 likes. That's awesome. And thank you for the super chats to those that sent super chats. And thank you everybody for tuning in and supporting the channel. And I'll catch you on the next one. All right, see you guys.